And welcome. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show, the Friday before a long weekend. I hope everyone out there has some nice, relaxing plans set up. But as always, we're here to help you navigate the markets. We're going to take a look at some of the action that occurred last week, as always, with an eye toward helping to set you up for success going into the shortened week next week. So let's get started. Take a look at what we're going to be covering today. As always, we're going to take a very close look at the broader markets, get a sense of where we are currently, and kind of talk about what we're looking toward going forward. And then also I'm going to share with you some defensive areas of the market. This week, we did see a number of REIT and utility stocks really powering to new highs. And a lot of them, there are sound reasons that they are moving higher. It's not just defensive, it is growth prospects. We're also going to look at stocks that have reported earnings, those due to report next week. We are still in the throes of Q4 earnings, and a lot of interesting themes that are emerging in the face of earnings season this week. And I definitely want to share them with you because these companies that are reporting these solid earnings have also highlighted and upgraded their outlook for the remainder of the year. So you are definitely going to want to stay on top of that. So let's go ahead and get started. What I'd like to do is share with you a look at the markets, but let's go ahead and take a quick moment here because I want to show you the S&P 500 as always. And go ahead and move this over because we want to take a look at where the markets are currently. And that's, of course, very relevant to your game plan. You, as always, want to make sure that you have the broader markets behind you as far as the uptrend, if it's there, making sure that it is still in place. So we're looking at a daily price chart of the S&P 500. As usual, I've gone ahead and overlaid these simple moving averages. This green line is a 10-day simple moving average. Red is the 50, blue is your 200-day. So as always, we want to see the markets trading above an upward trending 10-day simple moving average. And we do, in fact, have that. Up above, I have what is called an RSI. That's a relative strength indicator. We want to pay attention to not only the slope, which is upward, but also is it above this net neutral 50? And in fact, it is. So we have a bullish RSI. Take a look down here. This is something that we reviewed last Friday. This is the moving average convergence divergence, another momentum indicator. In addition to the slope, you want to look, we were on the prowl for this black line crossing up through the red. That is a signal that this near-term downside momentum has been reversed. So that signal continues to post positively. So overall, we are certainly in a currently near-term bullish uptrending period for the broader markets. So that is quite constructive, certainly in face of what we have seen as far as the broader markets bouncing around a bit with the coronavirus fears. Good to see that we are still in good standing. So from here, we are going to go ahead and drill down even further beyond the surface of the broader markets. So I've gone ahead and we have each of the 11 S&P 500 sectors. This is Candle Glance, available to you on StockCharts.com. And what we are looking at is a 2-month daily price chart of each of those sectors as well as the S&P. I've gone ahead and added this relative strength indicator, and I'm sorting it descending. We want to see where the strength is. Where is that outperformance so that you can capitalize on that? So sure enough, here we are up here in the forefront. I mentioned to you utilities. Utility stocks were up almost, 2.5% plus, but we can see that they broke out of this nice base. This is an area that I've been talking about for quite some time. It did start its uptrending move here. We can just go ahead and quickly pull up a bigger chart. It did bring up here in the beginning of January this breakout of a flat base and a continuation. This had everything to do with Google and then Microsoft announcing, certainly Microsoft with their carbon footprint, that they are on the move to eliminate that. Google had a renewable energy announcement, as well as other companies. So that really did spark a move into select utility stocks. And then this week, it has been carried on even further. We're going to take a look at some of the stocks in that group because, as I mentioned, there are very clear-cut positive growth reasons for why these utility stocks are popping. Real estate, this is going to be REIT stocks that are by and large higher yielding, up almost 5% for the week. Those of you might not be familiar with the dynamics of earnings season, but this week was the beginning of earnings season for these REITs. Now, these REITs do not report earnings, they report what is called funds from operations. But as usual with earnings, you're looking for growth, and we are seeing a lot of movement here. Can't wait to share uncover what's going on in that space, because it's nice that you can take advantage of the strength, and in addition, you're getting a nice yield in many of these REIT stocks. Take a look, consumer discretionary up here in the forefront. Certainly Amazon has something to do with this, but also we're seeing renewed strength in a lot of those beaten down travel related retailers that really got hit with the coronavirus fears, but they are coming back into favor. Also technology, good old technology up here in the forefront. I'm going to show you a nice, beautiful enlarged version daily of this XLK technology sector, very much in an uptrend. Lots of strength here. So it's a really interesting market in the sense that we are seeing continued strength in areas such as technology, up 2.3% for the week, as well as areas that are normally viewed as defensive. So from my work, that's a win-win. You can participate in these high growth areas and then have the defensive areas that are also showing growth as something of a buffer to these high growth stocks because of their nice yield. So let's go ahead and move on, because what I want to share with you is some of the weaker areas. This is healthcare. Healthcare wasn't even up 1% this week, but there are pockets of strength that we will get to within healthcare. All is not lost here. And then, of course, materials, a lot of these global facing bigger companies in declining phases, and energy just cannot get out of its own way. It's still very much in a downtrend. It was up a little over 1% for the week. So what we are going to go ahead and do from here is expand our view below the surface, drill down even further. And what I've done here is put in those other indices, the NASDAQ, the Dow, the S&P is here as well, as is small cap stocks, Russell 2000. We want to keep an eye on those because a move into small cap stocks is bullish. It indicates confidence that the economy is growing. And so we pop that in there, as well as gold, semiconductors, and then also biotech, high growth biotech names, and software. Again, that RSI, relative strength indicator, descending. And then over here, up here, showing the most strength among those groups that I've mentioned is software stocks. And this is well worth blowing up, because I do want to share with you this phenomenal move that we have seen in software stocks. And certainly of note is the fact that while the broader markets and a number of industry groups really got hit here in late January by that coronavirus, very real fears, software really only had that one dip day sideways trending, but by and large was able to withstand the downward pressure in the broader markets. And that signals a leadership group. When you have a group in an area that's able to, and it's not defensive, and it's able to withstand broader market pressures, that again is leadership, and you want to have representation in these software stocks. Lots of positive names. Those of you that are listening that are subscribers to my MEM Edge report, you are well aware we've had a number of stocks that are popping up 8%, 7%, 6%, and so on as they report very strong earnings. And then from there, the NASDAQ, this is going to have a lot to do with technology, of course, heavily weighted within the NASDAQ. Gold stocks still holding up well. For those of you that are gold bugs, it is still showing up constructively. And then we can see semiconductors. Semiconductor stocks were, we'll take a look at that within technology, but far and away, the strongest subgrouping within technology were these semiconductors, up almost 5% for the week. And then drilling down into these weaker areas, this is oil prices. And we also have the yield on the 10-year treasury continuing to be by and large in a bit of a downtrend. So that's a look at the markets as far as where we are, the groupings, and I do have time to take a look at some other areas that I mentioned that we would be going ahead and covering. And I'm going to go over to this sector summary here at StockCharts.com, taking a look, and I talk about this each and every week, your ability at the end of the week to very quickly get your arms around what the bigger movers were. So here we are with the real estate REIT area up here in the forefront. I'm going to go ahead and access the underlying industry groups and take a look at some of the bigger performers. So it shows here that specialty REITs up 6%. And then even on down, we have other areas that clearly outperformed the broader market. So a lot of strength. There are two areas among these REIT stocks that we are going to go ahead and focus on. We're going to take a look at one area right now before I take a little bit of a break. And so here we are. This is the specialty REITs is the name for that. And take a look at some of these. For those of you, you may not be very familiar with REIT stocks, but as someone who screens the markets, is going through thousands and thousands of charts each and every week, I'm certainly have a broad knowledge of a lot of areas. So what I wanted to point out to you here, up here in the forefront, two, SBAC, AMT, there's another one that we're going to look at that is in the same group. Let's take a look at the movement, and I'm going to share with you, pull the curtain back as to why these stocks are really gapping up here. So this is SBAC Communications Corp. And this particular REIT stock owns and operates wireless infrastructure. So why should that matter? Well, this week we had a huge, very impactful merger that was finally mostly approved. There's just a very small step ahead, but it was Sprint and T-Mobile. They had their merger. And within that merger mandate, the judge that presided over the ruling stated that these companies in the next 3 years have to provide 97% of the US population with 5G. Now, I know 5G is something everyone's heard a lot about. It's providing faster data. And so there are other areas at the end. I'm going to share with you other stocks that are relevant and then are also being positively impacted by this judge's mandate. So SBAC, we can see this nice gap up. Take a look at this big spike here. And despite this significant upward trending move, analysts are still quite bullish. So when you get these big moves up, what I would do is from here, go ahead and take a look at the intraday. And I apologize for the background music, but this intraday is a 1 hour price chart. We have simple moving averages. And what you can see here is I have a 5 and a 13-minute. I don't always drill down to this minute, small of a time frame, but it can be really powerful when you're looking at these stocks that are gapping up, moving up. So if you were in this stock, you can certainly stay with it because the stock is finding a presence above these shorter term simple moving averages, very much in an uptrend. Yes, it is overbought on the RSI, but that's not to be concerned. What might concern me here is this MACD MACD, black line down through the red, signaling that this really powerful portion of the move may be over. But I would argue that you will get those downdrafts and then back up. So SBAC does still look constructive. I think, yes, I have time to go ahead back because we do want to take a look at AMT. That was another stock that provides the towers for these fiber optic power lines that will provide these 5G networks, again, that are being mandated. This is American Tower Corp. I did want to mention SBAC doesn't have a big yield for a REIT. It's 0.5, AMT 1.5%. And this company owns over 170,000 telecom infrastructure sites. So you can see that it would benefit from this ruling. Again, another gap up here. Now, this formation following the gap up is a high tight flag formation, which is quite bullish, but again, helpful to drill down into this shorter term that's giving you a little bit more of a mix. And it's certainly to be expected after this gap up that the stock will consolidate. The price has broken down below those shorter term, so not as interesting to me as an entry point. You do want to be on the prowl for this type of dynamic. Again, on this 5 and 13 minute simple moving averages on a 1 hour price chart. You want that price to be breaking back above those simple moving averages, and then a positive, the green shorter term up through the red is a golden cross. And then when you can marry that with other positive signals, a MACD getting into positive territory, RSI up here, you are back into an uptrend. So that's one strong area within REITs. There's another stock that we already had on our MEM Edge report that is up 10% for the week. So subscribers were able to benefit from that. But I'm going to take a brief break. When we get back, we're going to share and study another area that is showing very explicit strength within the REIT stocks. We'll be right back. And welcome back. We are going to go ahead and continue carrying on with our really drilling down within these REIT stocks that were up 5%, because we just talked about the merger activity impacting. Now we are going to take a look at some of the areas that have reported their earnings, and that has been very impactful here. So another area is the medical building space, and it's actually called medical services. This first one that we have up is medical properties. This is another MEM Edge report stock that we had on prior to the release of their earnings. So we're already looking at a daily price chart. The stock gapped up on that earnings and is continuing higher. We can go ahead and pull up a weekly and we can see it's up 4%, but the stock was up over 5% last week after reporting those very strong, and I should not say earnings, it is funds from operation. But what I do want to share with you is the dynamics that are taking place among this industry group, and that is the fact that there's been a real shift in medical services. We are moving away from inpatient services to outpatient. And there are a number of reasons for that. One of them certainly is the fact that we now have surgeries that are not needed, overnight stays are not needed. And what's happening is this move is bringing soaring demand for medical office buildings. So these REITs that I'm sharing with you today, this is Healthcare Trust of America. And take a look here. I have the full quote. You can do this on StockCharts.com, and it will provide you the yield is 3.7% for this stock. But I wanted to share with you a little bit more about the dynamics, and that is these medical office buildings, they are less vulnerable to reimbursement and regulation changes. It's a big hot button going into this election year. Also, you get a nice predictable revenue stream that these companies, they also have shorter term leases. So every time their leases turn over, they're able to increase the rent. So it's really a dynamic area, these medical services, medical buildings. So Healthcare Trust, they just reported yesterday after the bell. We can see the gap up 2.5% today. They came in with numbers in line, but they also guide it higher because of these improving dynamics. We're going to take a look at a couple of more of these healthcare REITs because I have a lot of other areas that I want to share and cover with you. This is Welltower. They have reported 94% occupancy rate. That's very, very high. And they also, that is really unique for this particular REIT as far as medical buildings, is if you are able to be adjacent to hospital campuses, that's the best. And Welltower is positioned well as far as the location of their real estate properties, 3.9% yield. And we can see that the stock just broke out of this nice 1 month base on volume. RSI is positive. Take a look at this MACD on the daily chart, that black line up through the red, very bullish. So I think I have time to share one more. And those of you who would like more ideas, you can always trial my MEM Edge report. We're going to be talking a lot about this over this weekend. So that's your REIT area. I did want to spend some time going back and looking at utility stocks because that is another area. I shared with you that group chart that showed you that the move into utilities really did begin at the beginning of January. It had a very rightful pause because it had had such a significant move, but it's up here in the forefront again this week, 2.6% move for the week. I'm going to show you one of the biggest movers this week. And this is, I have about 36 stocks on the MEM Edge Report suggested holdings list, but you will see this dynamic occurring quite a bit. We had this on before they reported. This is Duke Energy, DUK. Let's go ahead and pull up, let's see what version we have here. We're going to go ahead and pull up that daily price chart, and you can see this big, nice gap up on earnings, and it is continuing and following on. I'm going to share with you a dynamic that is taking place within utilities, and that is alternative energy. The alternative energy stocks have really, this is a theme that we picked up on prior to that January uptick in these utility stocks because it has been a real hot button, but even more importantly, the growth dynamics have been really tremendous as a result. Duke is at the forefront of the movement away from coal and into sustainable energy, renewable. They put systems in place years ago, actually 3 years ago, that are just now starting to take hold as far as being able to offer alternative energy and they're in a position to financially benefit. So we can see this nice gap up here, the RSI and MACD showing quite positively. So Duke is one. I'm going to share with you other stocks and then also some ETFs that you can look at if you're not inclined to look at individual stocks. Perhaps you don't have the resources or the desire even to drill down and look at the companies. That's something I absolutely love to do. It's my curiosity point. But here is a little bit slower of a mover. This is Dominion Energy, ticker symbol is D. Take a look, 4.2% yield. This particular company, they just announced a partnership with Facebook, renewable energy partnership. So we can see that the dynamic is there in this particular company. They also announced that they are on track to have net zero in emissions going into, it's not for quite some time, it's 2050. So, but certainly they are on track as far as participating in this renewable energy. The company also did come out with their earnings and they were quite constructive. Analysts are raising estimates for this 4.3% yielder. I'm going to share with you very quickly a couple of the utility stocks that or rather the alternative energy ETFs that you might want to keep on your radar screen. But more importantly, as I mentioned in the beginning, this earnings season is really uncovering and pulling the curtain back on some very interesting themes that do seem to have momentum. This is one of the bigger ETFs. It's iShares Global Clean Energy, ICLN. We can see this nice uptrend. We're looking at a daily price chart. It is overbought according to this RSI, but take a look back here. The RSI remained for well over a month in an overbought position, so not as concerning. We did have that nice positive black line up through the red on your MACD, signaling the beginning of this near-term uptrend. So that is one name. One other one that we can take a quick peek at, PBW, and that is Invesco Wilder Hill Clean Energy ETF. And it's a little bit extended, but we can see that it broke out. This is a daily price chart, broke out of that nice space into an uptrend. Again, RSI can be quite up there for quite some time. So those were two themes among defensive areas. I also want to make sure we don't miss out on looking at companies that reported earnings this week. These are going to be significant companies as far as their relevance in the broader markets. We cannot not take a look at NVIDIA because NVIDIA had a huge, gapped up 7%, but it's up over 12% for the week, I believe. And the bigger point is the company blew the doors off of their estimated earnings. It's actually up 15%. Yes, this was on the MEM Edge list prior to their earnings, but more importantly is the significance because semiconductor stocks really have been had been suffering. I'm going to go ahead and pull up the semiconductor SOXX ETF. This is the break and the pullback on that coronavirus fear because a number of these companies do have, actually most of them get at least a portion of their revenues from China. So they really did get negatively impacted. But NVIDIA came out, they did guide a bit lower due to China-facing fears, but the company still came out with excellent numbers. All of this has to do with their chips, that they provide chips to data centers. So what I wanted to do, so semiconductor stocks, there's also a number of 5G related semis that we can take a look at, but let's stick with the theme here as far as companies that reported earnings this week. And this is another MEM Edge big winner, a nice software stock and a very nice uptrend. RNG is the ticker symbol. We can see this gap up. It really is quite a bit overbought, but it's more to the point is that these software stocks, in addition to having experienced significant uptrends and bypassed that fear-based selling, they are coming in this week. We're seeing a nice number of stocks that are popping on strong earnings. So that is, again, software is a leadership area, so you want to see continued outperformance. I wanted to be sure I had time to share with you a couple of stocks that are due to report next week because you're going to want to keep an eye on them. We are still in earnings season. Walmart. They are going to be reporting, and I wanted to point this out because we can see the stock has really not been doing well of late, but take a look at the price. This is a daily price chart. The stock broke back up above its 50-day simple moving average, and oftentimes that can be a sign of a downtrend reversal. Take a look at this big volume here. So the RSI also turned positive, and we can see that the MACD is just now poised to also go into positive territory. So I would keep this on your radar radar. Everyone's going to be looking at digital sales. If they come in with decent numbers, we could see a nice downtrend reversal. I'm going to leave it at that.